Thank you everyone for joining me here today. I'm looking forward to talking about how the 2024 election is likely to impact markets and how I'm positioning myself. I'm Matthew Caruso. I'm a former market maker, full-time professional investor, and I'm happy to walk through my perspective on the market, both from a top-down perspective and also how I'm looking to actually position through individual stocks. I do always focus on the impact of elections, but my view is always you need to kind of overlay that with the actual dynamic trends that are going on in the market. Nothing really happens in isolation. So we're going to be able to kind of take a look at those two together and how I'm trying to marry those two different driving forces in the market come this November. So let's get started by kicking off and taking a look at the high-level view of what we're dealing with come November. So looking at both Donald Trump and Kamala Harris, in my opinion, we really have opposing economic views, not just in terms of what the stated goals are, but really about how to get there. And it's really quite interesting. So, I would put, these are obviously generalities, but I would put Trump more in kind of a bottom-up type of perspective. So it's more about kind of deregulation. I mean, by bottom-up, I mean, let the individual economic agents work on their own rather than being guided by government as a whole on the margin. That's where I would say he's aiming towards. I think a big push at deregulation is great in terms of promoting economic strength. Having Elon Musk as someone who's volunteering, who's already one of the world's best entrepreneurs to kind of be on board to take that on is, I think, something that would pay dividends not just for the next administration, but for many, many years into the future. So looking at deregulation, that's going to have significant impacts on who wins, who benefits, and who will struggle on a relative basis. So something that's important to pay attention to. On the other side of things, what's interesting is although he tends to be, I would say from that perspective, a bottom up, but there is that strong perspective that he has that is really driven by the federal government, which is his view on tariffs and international competition. So he's pro-domestic production, so he's pro-tariffs in a lot of cases, specifically when there's foreign competition that he argues is not fair competition or being subsidized or whatnot. In general, Trump is in favor of lower taxes. What's really interesting, both Trump and Harris is both having already served in federal government, Trump as president and Harris as vice president. We get to hear about what they plan to do, but we also can see what they've actually already done. So I would really put Trump in the situation of being in favor of lowering taxes on a broad spectrum. And in general, some of this is maybe qualitative and perspective, but I would say in general, Trump is more of a pro-capitalist type of mentality, whereas Harris is more on the socialist side, I would say. So when you look at kind of Harris, and I put, her view is, I would say, tends to err on the side more of increased regulation. Again, more of a top-down perspective. I put, Newsom as just an example. She's also from California, and I think a lot of that kind of ideology is consistent in how there's always, if you look at California, which is something that, a governor has a lot more direct control over, and not to say that they have the exact same views, but things like climate change is usually pro-regulation. AI, which is just a really dynamic and important industry and I think revolution in a sense, where you can see California is kind of leading the charge in terms of regulation of how that's implemented. So that, again, has winners and losers. Pro-centralization, tends to be that I think Harris's camp would be more the federal government plays a larger role, and again, pro-socialism. So I thought we can argue about both sides about who's better and what the outcomes are and what the outcomes can be. But I thought it'd be great to kind of take a second and actually look at a couple of international case studies that we can study in real time that are actually going on that I think are incredibly relevant, where you can kind of compare these two different outcomes. So let's switch the charts and take a look. So in discussing the two different viewpoints on economics, I think it's really interesting that we basically have someone with a very similar agenda to Kamala Harris here in Canada, where Prime Minister Justin Trudeau has very similar policies in terms of immigration, in terms of economics, in terms of taxes. A lot of similarities. And so basically I said, let's take a second and just from a top-down level view before we get to the individual stocks, because although the stocks are important, it's a rising tide lifts all boats, or it could be, just a difficult environment for everyone. And if we take a look at the two, so when this vertical line here is when Justin Trudeau was elected into Canada, and here we have the S&P on the left side, we have the Canadian ETF on the right side, and at the bottom I also wanted to show gross domestic product per capita for both countries. So how much each person kind of their share that they get to take home from the of total GDP. And you can see here over this period from when Justin Trudeau was elected, I mean, U.S. GDP per capita has grown 45%, whereas in Canada, it's only grown 22%. Similarly, if we take a look at stock market performance, the S&P 500 is up 175% over that period, whereas the Canadian ETF is up only 78%. So this is a really interesting comparison because very similar economies and cultures, we're neighbors right next to each other, and Trudeau becoming prime minister really had a very large departure from what was already in place in the country prior, and he's really put into practice a lot of the kind of stuff that Harris is focusing on. It's difficult because obviously there's the actual what will be implemented, what are their viewpoints. Right now, for a lot of things, we're still kind of looking at what they say they want to do. But just to get an idea of not necessarily, the words capitalism, socialism can be sold out, thrown out and have, big emotional responses to them. But if you just take a look at it, from a top level view of the impact of having more socialist policies, it's not the end of the world. We don't spiral into a disaster, but it does likely lead to a less than possible outcome. It results in a less than optimal economic outcome. And so that's really interesting to compare these two. But to go one step further, I thought it'd be interesting to look at the other side of the spectrum. So similarly, at the same time, if we take a look at Argentina, now this is not as perfect a comparison. The cultures, economies are a lot more different than Canada and the U.S. But if we take a look at this one moment, and if we take a look here at Argentina, they had a new government elected with Milei, and he is a very kind of pro-capitalist, deregulation focused leader. And what's interesting is from when he was elected in the fall of 2022, we can then compare this with what's gone on versus the US. The Argentina ETF is up 112% to the end of September, whereas the S&P 500 is only up 40% over that same period of time. So it's really interesting to see kind of the more socialist policies of Canada led to a less than optimal outcome in terms of economic performance and as well stock market performance. It's a little early to look at just the economics of it with Argentina, but you can just looking at stock market performance, it's a pretty dramatic difference. Now, obviously, it's a smaller economy, so there's different impacts, and obviously, it came from a very bad situation in terms of inflation. But it's just interesting to see how taking a dramatic shift on economic views, going after deregulation, and allowing individual actors to kind of lead their future rather than having more of a top-down view, has led to a very powerful stock market. So, in my view, depending on who gets elected. And even at a federal level, there's only so much power someone has. But in general, I think a President Trump presidency would probably result in stronger general economic growth, stronger stock markets, and more economic prosperity. Where I think Harris would be the lesser of the two. I think looking at what Canada has done versus the U.S. is probably a good example of what can be under the two different administrations. So let's go a little bit further before we get to stocks. That's kind of the high level view of what I expect to take place. But going down a little more into the details, I really think Trump is, like I said, is more of a risk on situation. I think I put Harris as a risk off, but in my view, it's really more about a hot market, what can be a hot market, versus what would just be a warm market. I think in general, the US has very positive trends building forward. They're still leaders of innovation. There's always different issues, such as which I think is excessively high debt. But interestingly, neither person has very strong policy about reducing that debt load. Both are larger spenders, and neither are very pro austerity. So just in comparing both people, I would view Trump more as a risk on with a broadening market. By focusing on domestic production, by focusing on lowering regulation. That helps small to middle-sized companies over their large counterparts. Although regulation is usually looked at as a way to protect consumers and protect different people from different perspectives, the result is, though, however, that it does tend to help, or on a relative basis, large companies, because regulation, even if there's a proper purpose for it, it does increase cost. and small, medium-sized businesses are less able to bear those costs than the large competitors. In fact, a very highly regulated market usually results in less competitors and larger competitors for those that are left behind. So I think Trump ends up with a broadening market as companies can be more dynamic, they have less red tape, they have less costs, and that really kind of boosts entrepreneurialism. Whereas a Harris election, I think, would be a little more risk off on a relative basis and would favor established incumbents. But I want to go a step beyond just kind of discussing generalities. Let's take a look at exactly what I mean by comparing two different ETFs. So here in the upper chart, we have the S&P 500. And down here, we have what I think is a very interesting relationship. We're looking at IWP, which is the mid-cap growth ETF, divided by the S&P 500. So when this is climbing, it means mid-cap growth stocks are outperforming the S&P. And when this is falling, it means the S&P is outperforming. Both, and obviously, the Biden presidency is not Harris, but she is the vice president. So I think there's, in general, similar views to Biden than to Trump, obviously, of course. So taking a look at the dynamics under the surface, this ratio, in my opinion, is really what describes a hot market versus a warm market. So the kind of market that active traders like, one where there's many stocks moving, there's dramatic moves in growth in growth stocks. I've always been a growth investor. This kind of market where mid-cap growth stocks are outperforming tends to be a hot market where there's a lot of activity and there's dramatic moves for individual companies. Whereas you can see when Trump got elected back in late 2016, almost immediately, this relationship started to move in favor of mid-cap growth. Interesting, even despite the whole COVID pandemic and all the kind of money that was sprinkled on the economy, we saw a lot of that ended up funneling through towards mid-cap growth, which dramatically outperformed the S&P 500. Interestingly, from when Biden was elected and really from when he basically took office, the ratio peaked, and it's been very much one way down. But what's particularly interesting is that mid-cap growth tends to do well in bull markets. But not all bull markets are created equally. So you can see it's interesting, although the S&P 500, especially this last leg from October of last year until now, seems like a pretty steady advance, it has been dominated primarily by large cap companies. It hasn't been led by young, dynamic companies. It's been more led by incumbent companies. And again, that kind of falls in line with, I think, the priorities of the administration. So I think this is a good example of how the S&P has advanced under Trump's presidency, it advanced under Biden's presidency, but the character has been very different. And so when, again, we're discussing how it could be a hot market versus a warm market, that really comes down to which stocks you want to position in and how you should expect them to perform, and really where you want to allocate your companies amongst not just sectors, not just market caps, but also styles of companies. So higher growth companies, mid-cap growth companies. If you're a higher growth investor, I think a Trump presidency would do better for you. And if you're someone who's more focused on incumbent companies, you like companies that are established and that are growing incrementally over time, I think on a relative basis, you would do better under a Harris presidency. But let's take a look now at the individual company names, individual themes that I think are going to be successful going forward. So again, my background as really a growth investor, a stock picker, really comes down to how do I use the general environment to find the next great growth companies with potential upside, the substantial potential upside. And this is really where I think politics meet innovation. The fundamental principles of the U.S. Allows such dynamic companies to keep coming to market. And so in general, I think the U.S. is in great shape. AI, although it's thrown around and it's almost even difficult to say sometimes because it's just so overused at this point. But the reality is with literally hundreds of billions of dollars being spent on infrastructure solely to power AI. Just recently, Microsoft signed a deal with Constellation Energy to reopen 3 Mile Island nuclear plant in Pennsylvania, specifically to power green energy for their AI data centers. They signed a 20-year deal to do so. We're getting significant investment. Microsoft also partnered with BlackRock recently to create essentially a $100 billion fund to invest in AI infrastructure. So this kind of money being spent is only being done if there is really substantial opportunity going forward. And I do see that substantial opportunity. So let's take a look at these stocks one at a time and the different themes. In my opinion, the biggest driver going forward is going to be the AI theme. Every era in the market, every big bull market always has a key theme that tends to lead. 90s was internet, obviously. During the 2020 COVID bull market, everything was about staying at home, work from home. Every cycle is always a very strong theme that will lead. Earlier years, it was the software as a service, which was a really big kind of revolution in terms of pricing. So the current era, in my opinion, is really AI, and I think this is going to have such a massive change to the way people do business. This has legs for quite some time. So the key industries that I'm looking at going forward are energy infrastructure, which I think is an absolute key. Autonomous driving, which I think is going to be one of the first really big industries to be changed by AI. And it's funny, when I started as a market maker, I remember all the algos, basically, which now we'll call AI, but all the algos kind of started. And as traders, we thought, oh boy, they'll never replace us. This is such a complex business to do market making and all the rest. And this is the last thing that they'll be able to do with computers. Well, fast forward, and most trading is done by high frequency trading and algorithmic trading. So I don't have a doubt that autonomous driving will be solved. And there's already been a lot that's taking place there. We'll talk in a second. But that really is an application of AI, and the transportation industry is such a huge market, and it has such a large possibility to disrupt how we live our daily lives. I think that's something that deserves a lot of attention. And then it comes down as well to defense is always important. Housing's been an issue. And with all of AI, there's identity and regulation. So let's take a look at these one at a time. First off, let's talk about GEV, because I really have this under both presidents, because I just think it's a great company, and their diversified operations really allow them to do well in all situations. So GE Vernova is a recent spin-off from General Electric. They split the company into three different portions. GE Vernova is the portion that works on energy. So they have three different divisions. They have oil and gas, they have wind energy, which is renewables, and they have small modular reactors, which is nuclear. So they really have kind of the their position in really all of the important markets. So with this very large build out that's taking place for AI, and just in general, electrification, even under Harris, there's a constant push more for electric vehicles. So there's going to be more and more demand on the system for electricity. I think AI has just kind of really fast forwarded that progress. So if we take a look at GE Vernova, they recently IPO'd, they had their first rally off of that IPO, and they went through a very healthy basing structure. From here, we've had a substantial advance. This may look like it's extended, but from the big scheme, the big perspective of the amount of growth coming to this sector, I still think it's early days, and I think they're perfectly positioned to be able to support the growth for AI infrastructure. So yes, this is extended from, this is its 10-week moving average, the same as its 50-day moving average, but it's really interesting to take a look at what GEV is doing at the same time. If you kind of compare that to what the S&P 500 has done, which has also been strong, it has been substantially stronger than the S&P 500 over the same period of time. So I think GEV is definitely a leader in the market and a leader within a key theme. Looking at how to position through this, so we do have earnings coming up in just about a couple of weeks. But as a very, very strong leader, barring some kind of extreme disappointment on earnings, this is a stock that I'm constantly looking to add to my position. I was lucky and fortunate enough to build positions in this area here as it was coming out of this basing structure. And this is one where it is extended the short term, but this is one where I'll be looking to buy on any kind of weakness. It is a utility, so it's unlikely for this to stay so extended for a prolonged period of time. But rather, as a utility, this is something that usually, as it pulls back, becomes a very nice buying opportunity into a key theme. So again, whether it's Trump, which again, deregulation will probably push AI infrastructure to be grown even faster, but under Harris, equally, there's very strong demand for electricity, whether it's going to be AI or also electric vehicle incentives. I think GEV is extremely well positioned to benefit from both of those. However, in addition to GEV, one that I think would do even better under a Trump presidency would be Cameco. So if we bring up Cameco, we spoke about the nuclear energy and the reopening of the plant in Pennsylvania. The uranium market is one where there's a couple of main players. There's Kazakhstan, which has they're basically the Saudi Arabia of uranium, and number two is Canada, also has dramatic deposits. for many years after the kind of the Fukushima disaster, if we take a long-term picture of Cameco, we go back in time, that was in 2011. You can still see the gap down from when there was that meltdown in Japan, and basically nuclear energy became an unwanted energy source for many, many years. So it's interesting to see how this went from an energy source that completely was not wanted to suddenly reopening nuclear plants, which is a very big decision because these are plants that you need to have substantial supplies, substantial uranium on site, so you can always keep energy moving at a constant pace. So the main business in the uranium business is long-term contracting. They don't usually work off of spot like the oil market. Their focus really is on long-term contracts for sustained supply to all of the different reactors. So there aren't many players in the market to begin with. There's the Kazatomprom, which is from Kazakhstan, and there's Cameco, which is Canadian. Now, obviously, if there is a push for more domestic or at least friendly supplies, I think that positions Cameco as a unique opportunity in a space that's building out. I think what's interesting is, again, there's not a lot of open supply because for so many years, this was a no-go industry because nuclear was pretty much dead. So suddenly from going from no interest to suddenly a lot of interest is going to put a lot of upward pressure, I think, on uranium prices if this trend persists. I mean, Google's already spoken about looking to reopen nuclear reactors as well. So it looks like a developing trend. And I think under Trump, if his focus is about domestic or friendly supplies, I think that plays well to Cameco as a major. And if you take a look also at their earnings, you can see their earnings line here, how earnings have dramatically changed from a relatively poor situation just a couple of years ago to where now Cameco is printing some fairly nice earnings per share. So some pretty steady growth year over year for the different quarters, which is impressive overall as a trend. A very small cap or focused domestic opportunity, I think, would be UEC, Uranium Energy. This obviously is a small cap stock, so it's not really, doesn't have the same kind of stability as a Cameco, but their operations are almost entirely US based. And they spent many years putting together their production profile. So I think if there is a dramatic move in the uranium price and there's a continued push into nuclear, I think specifically under Trump, these companies stand to benefit quite a bit. The next theme I'd like to take a look at is Tesla. So we spoke briefly about autonomous driving, and in reality, I don't think either administration would hamper the developments in the industry, and if either Musk or a competitor would develop autonomous vehicles, I think in general this would be a net positive for society. But obviously, with Elon Musk being a substantial supporter of Donald Trump this election and having a super PAC, speaking at his rallies, I think clearly it'll just be that much better for Tesla if they have a competing product versus another competitor. But really, I see this as a broad trend. But obviously, Musk having such a close relationship now with the president will obviously, I think, be, if anything, in a slightly better position than some different competitors should Trump be elected. Taking a look at Tesla, we've been in a prolonged sideways consolidation pattern. This had a dramatic move up into 2021. It's interesting. This is still trading at a very high multiple relative to other car makers. I mean, if you're taking a look at Ford and others, I mean, these are very low PE stocks, whereas Tesla is trading at a much, much higher multiple. And in reality, I think there's been a lot of time taking place here where people see all of the ancillary businesses in addition to electric vehicles that Musk has been working on. For it to command its multiple, I think he has to be able to bring those finally to market and show them, or eventually the market will be disappointed. But you can see here from a technical perspective how really the opinion on Tesla is getting closer to a unanimous opinion. The volatility is condensing. We're going to find out very soon, are the bulls correct and we break out to the upside, or will the bears be correct and we'll break down to the downside? We have the robo-taxi from, as we're speaking now, the robo-taxi event will be taking place tomorrow night. So it'll be interesting to see what Musk does and if it can break out of this pattern. It could be short-term if good news is announced, or even maybe down the road if it's something that will take some time, but greater visibility is going to be very important here for Tesla. On the kind of the other side of the spectrum, we can take a look at Uber. Uber, I think, is an interesting play as well here regarding autonomous vehicles. Autonomous vehicles are going to be very capital intensive, especially if you're coming to market simply as an autonomous vehicle solution. So there's Waymo, which is part of the Google family, where they have many autonomous vehicles already driving in California. And they just signed a deal with Uber as they want to bring some of those vehicles to Atlanta and Austin, Texas. And they want to put those on the Uber platform, which is different from how they're operating currently in California. So I think Uber stands in an interesting place to become the, basically, I guess pun intended, to become the toll of autonomous vehicles. Because I think autonomous vehicles are so capital intensive, anyone who's running a autonomous fleet, a specific autonomous fleet to be put out as a taxi service, you're going to want to get the most use possible out of your vehicles to be able to increase your return on investment. So yes, maybe you have to pay Uber their share to be on their platform, but having already what is the largest marketplace for transportation right now is Uber, I think it's a must-be to be on that platform. And I think not only will Uber have the opportunity to get all of these new autonomous rides, I think once autonomous vehicles get to scale, the cost per ride will drop significantly once there's no longer a person needed to drive the cars. And then after that will be a real competition for an entire different market, which is the auto market in a sense, because people won't necessarily be buying traditional vehicles. They'll probably be, in a lot of the marginal cases, they'll just be using Ubers with lower cost autonomous vehicles as an option. In a lot of cities, if you live in a downtown city, just the cost of parking spots can be $20, $30, $50, $60, $70,000 just for a spot, in addition to registration for your vehicle, gas, insurance, and all of the rest. We've seen how high car insurance premiums have been going recently. So I think if this becomes mainstream, Uber stands at a very unique crossroads to become a substantial player in transportation in general, whereas right now it's really kind of disrupted the taxi business. I think it can help disrupt the entire automotive business in general, the transportation business. So really interesting. And I think they're uniquely positioned to take this on. And the recent partnership with Google, I think, is a good example. So whereas I think Tesla is a kind of a pure play in terms of Musk's relationship with Trump, I think Uber is kind of the broader opportunity that's available at the moment where AI meets transportation. Another kind of company that has been vocal, in terms of Trump support has been Palantir Technologies. And again, this is interesting because they're just now attempting to break out of what was the highs of their IPO. But this is being regarded, in my opinion, finally being understood as probably the first pure play software solution for AI at an enterprise level. I mean, everyone has, I think ChatGPT is what got everyone excited with AI. It's what helped lift the NVIDIA stock. I think people are now recognizing that, for a lot of, especially enterprises, large companies who want to bring on a lot of this capability, it's still not so simple that you can just plug a chatbot into it. So the capabilities are immense, but you need the right software infrastructure to be able to onboard enterprise clients. I think that's where Palantir fits in this equation. But what's particularly interesting about Palantir is they also have a very strong defense business as well. Trump is a very pro-defense president. He's all about always mentioning how he wants to rebuild the military and all the rest. I think going forward, a lot of the military budget more and more is going to go towards software. Whereas in the past, a lot of the physical manifestations of war, such as planes, et cetera, General Dynamics, Lockheed Martin, all the rest, have been where they've gotten most of the dollars in terms of defense budget. I think Palantir is going to play a bigger and bigger role. And again, given kind of the general support for even Palantir employees and all the rest for Trump, I think this stands to benefit both from a Trump presidency and just the incredibly strong tailwinds into AI, general AI adoption, and as well as AI adoption in defense. So Palantir is one that I'm watching very closely from that perspective. Again, this has had a strong move, but big picture, this is just breaking out of its very large IPO basing structure. So again, they are taking on massive markets. We spoke about the defense market. They have taken on very big contracts in the health market. They've worked very closely with the UK's national health system to bring down the cost of operation for hospitals, to speed up and optimize health delivery. So again, tackling very big businesses, very big total addressable markets, I think they have a huge runway in front of them. It's interesting, if you hear the CEO speak, his viewpoint is really kind of, which countries do they allow to use their software in terms of defense? whenever you have a product where you get to kind of decide who is allowed to use your product, I mean, that's a very powerful position to be in. And that's one usually only in a leadership position. So one, I think, very well placed stock to benefit from the Harris administration would be the rocket companies. So their focus is they are the biggest lender. They're one of the biggest mortgage originators. They have tremendous scale within all the housing market in terms of mortgages and all the financings and the rest. If you see here, I want to bring up this chart where you can take a look at, here we have the TLT in the upper panel, which is the long-term bond ETF. And down here we have the rocket companies. So you can just see very clearly the very strong relationship between bond prices and how the rocket companies are doing. Obviously, as interest rates increased, as bonds fell and interest rates increased due to inflation, that put a lot of weight on the housing sector. A lot of people who had long-term mortgages were basically frozen into their mortgages because they didn't want to break their fixed rate and refinance at a higher price. So that put a lot of pressure on the refinancing, the financing market, which I believe is beginning to unfreeze. What's important though, I think, is if we take a look, these blue background is my proprietary Caruso Adaptive Relative Strength tool. What it does is it compares the stock versus the benchmark you're comparing it to, but it adjusts for the relationship between the two. So if ARGT is more volatile, and if it has a very strong relationship to the underlying ETF, that'll come through in the calculation. This allows you to kind of compare companies of different volatility, companies from different with different correlations, and still get a good understanding of what the relative strength relationship is between the two of them. So if you see in this situation here, I'm comparing ARGT with the TLT. And so although it had underperformed during this big drop, ever since the bottom kind of came in, on all of these different rallies, this really started to outperform the TLT. But you can see really starting here back in October of last year and throughout this, even this basing period, ARGT has really been the place of strength versus TLT. What's interesting is we can also switch this over and compare this to the S&P 500. And you'll see that, interestingly, although this has been lagging for a tremendous amount of time, just as of recently, not only is this now outperforming bonds, it's also been outperforming the S&P 500. And this is taking place really even with bonds having recently given back a lot of their recent gains off of the bottom. So my belief is that ultimately bonds are in a bottoming phase. And should they break out to the upside, I think ARGT will lead. So I think with Harris coming to, with one of her key economic promises is to kind of increase home affordability. She wants to provide down payment assistance. She wants to promote home building. I think ARGT stands to dramatically benefit both from the tailwinds of Harris supporting the housing market, as well as just the dynamic between bonds and ARGT. I think just with bonds putting in a bottom, with yields topping out, this is a process, but ultimately I think they top out and bonds rally and yields fall. I think that's going to support higher prices for ARGT. How this comes together with the AI theme is with ARGT being one of the biggest data pools available right now on lending, financing, refinancing. They are really kind of adapting a data-first policy at the company to incorporate AI to become the real leader in the space. So their viewpoint, and what I love to see with management, is that they have such a aggressive plan for how to take a bigger share of the market. They want to become the leader of their market, just like Amazon.com is for e-commerce. They have stated that's their goal for their respective market. And it happens to be a very fragmented market at the moment, far more fragmented than e-commerce. So they see a very large opportunity to use their substantial data pools to be able to use that with AI to provide unique services, to provide better customer service, to provide better response times, to provide better sales support to their staff. So I think if they are, just like in the 90s when all the companies that were first to kind of move to adopt the internet and bring it in as part of their operations, they typically led in their industry groups. I think the same playbook is going to be taking place now for different industries. I think ARGT is one of the first to kind of deploy it in its industry. It's interesting because it's been a difficult time for this industry because of bond prices and the real estate market, but that hasn't slowed them from investing into the business. Whereas a lot of other people have kind of like held back and just trying to survive the winter of higher interest rates. RKT is actively working to kind of build out their presence, build out their functionality. And I think that's coming through by seeing how this has been really dramatically outperforming bonds. And although the correlation is still there with bonds, you can see on a relative basis where bond prices made new lows in October, RKT did not. Whereas bonds have basically been unable to take out their December highs, RKT has. I mean, even on this pullback, RKT is still above its December highs, whereas bonds are obviously right back inside its basing structure. So the relative performance is very strong. And I think not only does it have AI and interest rates as two different winds in its sails, I think a Harris presidency with her focused support on housing will do even better to help out RKT. The last stock I'd like to cover is another young dynamic company, which is YOU, which is Clear Secure. One of the main reasons I really want to speak to kind of Gavin Newsom in California and kind of his views even on AI in terms of regulation. One was to kind of compare his policies with Harris, who's also from California and usually has similar viewpoints. But also specifically, I want to mention that because with Clear Secure, I think it's going to have a very, very strong future, even stronger future with a Harris presidency, because their focus is really about identity and verification. So they began with helping people get through airports a lot quicker with pre-verification and all of that, so you can pay a membership fee and you can get to your gate a whole lot quicker than going through all of the usual TSA and all the different checks. But they've really expanded their business to where now, for example, on LinkedIn, you can verify with a government ID that you are who you are. And that's done through the Clear Secure platform. I think, Warren Buffett was speaking recently about how he said he doesn't know how AI is going to end up, but he mentioned about how one thing he's sure about is that it's going to be a massive bull market in fraudsters with the use of AI technologies. And I have to absolutely agree. So I think Clear Secure has a bright future in terms of the importance of what verification will be going forward. If people can fake images, fake voices, fake text, you're going to need a way to verify who is who on the internet. I think Clear Secure is very well positioned to do that. You can see they broke their long-term downtrend line. It's a young company. We broke higher right through this trend line. You can also see the very massive volume spikes that came in on this advance. You can also look at the tremendous growth in earnings per share for you. And it's been doing this while the stock has been under pressure. I think the market's starting to appreciate the broader story about verification and going beyond just the airport and how Clear Secure can be a unique winner. What's very powerful about their platform is once you're on their platform, you can very easily verify at many different businesses rather than just the one business that you verified with once they have kind of your information, all the rest. So it becomes a sticky business. It becomes one where the more it's used, the more powerful the platform is. So I think they have some significant tailwinds. And again, if Buffett is right, and he tends to be in the long term, this can serve to be a tremendous opportunity for verification. And Harris being more in terms of, along the lines, I think in terms of regulation, with especially around AI, if we take kind of the playbook from Newsom in California, that will only add even more, I think, strength to the use case for Clear Secure than under a Trump presidency. So I thank you very much for your time today. It was a pleasure here speaking with TrendSpider. I'm very optimistic about the future under both presidents. I think just from a purely economic perspective, as mentioned, I think Trump's policies would have more runway for markets and the economies in general. But I think the AI theme is so powerful. And if we can look past just the NVIDIA growth story and we look at really what that is going to power going forward, I think that really starts to unlock a number of really unique opportunities. If you'd like to learn more about me and have a look at a special offer that we have specifically for this TrendSpider event, you can join me at carusoinsights.com/TrendSpider, where you can learn all about my process and how I take all of these themes and my short-term timing techniques learned as a market maker to find really good risk-reward setups in the market. I appreciate your time and best of luck in the markets and through the 2024 election.